fair and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Here's the thing I was trying to show from yesterday. It's a kind of pickup mic connected to an LED light. It's a really simple like science project with you got a piece of a quartz wafer and you can basically just create a vibration on it. Let's do this properly. And it'll basically light up with the vibration. So you're generating power, like a self-sustaining power source. Anyway, that's a cool one. So good evening, everyone. We got the FOMC shenanigans in 90 minutes by the looks of it. Some more fun stuff occurring from here. This is another cool thing. You got... Ooh. It's a Fresnel lens. A Fresnel lens is a really thin magnifying glass. It's some cool technology that focuses the point of light. It's a good way to focus sunlight if you're trying to harvest it as well. Fresnel lens used to be used in projection screens. So, yeah, let's get into the charts. So, where we are currently and what happened to get us there. So we were talking about the idea of possibly going up before going down, and instead we just faded to the downside. And in this manner, it was if you take these 3 clicks from the top, the ultimate top of this local range down to the impulse to the downside and the retrace to the upside, you'd get this trend-based fib extension level that we are at. We previously had done it here, and we were reaching the outskirts of that on the 2 level here. And now we're just doing a fresh one of this new one for a bigger projection to the downside if we continue that in that manner. So we bounced off the 786, which is 21,829. I put in like a limit order at that level, and it filled. So it, and this also happens to coincide with a fair value gap. So if you had seen that this trend-based fib extension tool at 21,829 on this chart, but it would vary depending on the chart you're looking at. Just impossible. You're just impossible, aren't you? So, yeah, let's go to a chart where that fair value gap, I believe we laid out where that fair value gap was during one of the streams a while back. So you go back. Why am I getting like an echo? Is that from this? Music is overpowering my voice. I'm getting like audio capture. Let's see, hold on. I'm hearing like double for some reason. Hearing like an echo for some reason. Are you guys hearing an echo? Audio input captures the HyperX surround. That's correct, I believe. Yeah, could you tell me if the audio is like doubled up for you at all for the music? So, yeah, down here, back in February 14th, Valentine's Day, we surged up on an hourly candle here, but we didn't go back. We retraced back down to this level at 21,861, but we didn't go further into that candle, and that's what you would consider a fair value gap. If we go to a lower time frame, you can see that trade in there at the lower time frames. No, it did not. This is what you would call a vector candle as well, because it was colored under the PBSRA strategy. Not so much any longer. At the beginning it was. No echo on my end. It all sounds normal now. Great. Alright, so you have this this range here that didn't get recovered. We got tapped right into it. It might come and recover it all and go down to further fair value gaps. But in terms of an initial bounce idea, if that coincides with the fib level, you could have a bullish order block on your hands, and sure enough, we did. So that's one idea to look at with the fib levels. Sounds different for some reason. It feels like I'm in like a tunnel with the So on this chart, it doesn't coincide with that. But you did get that bounce off the 786. We're currently trying to attempt to hold that region. If not, you know where the next region would lie would be down here. 21464 would break through to this area with the pools of liquidity below. Know what to do. And let's go look at the liquidity. Let's take a look. Let's take a look. It's in a book. A liquidity rainbow. My cat is impossible sometimes. She just wants to bite my cables and scratch my shirt. And want all the attention, you know. You want, hey, don't be nasty now. If you're gonna be nasty, you gotta get down. So you still have this thick region down here at 21.6 that has not been taken. Caked up, but caked up in small entry levels, stacked over time in the 21.6 region. So if you were to immediately compare where we are to what's nearest by from this point, where the black line is to the right here, just immediately, without looking about, you just have a few people entering here and there, but most people are waiting for likely the news to unfold. But in the meantime, you have a lot stacked up here at the 23K region, leading down to 22.6 and 22.5. You got a thick band up here, and you got this thick band down here at 21.7, 21.6. Starts to get sparser at 21.5 and 21.4. So that 21.4 region bouncing off the one here would clear all of that out from here, this thick region of red, which is long liquidation points. Currently we stand minus 3.8 billion in imbalance to the upside based on these 1 minute candles, which go back about 6 days to March 3rd. So as we go forward in time, the previous imbalances get forgotten, so and turn into the heat map levels. So this doesn't necessarily mean that just because it's imbalanced by negative 3 billion that it will go up and grab this, but as we saw over time before, it does eventually stack up and go to that side. So this is why looking at this stuff gives you a kind of forecast for where the price may go. So do we go and clear out this region and bounce off 21.4 for the next bounce to the upside? Or is this rally over and we completely go into this pool and the trend is over? This level is very important to consider a higher low for Bitcoin. If it goes below this point, it's no longer a higher low, it would be a lower low, which would mean the trend is over. So this is a pivotal level and a pivotal time, as they like to do their dramatics and false narratives to steer price action. So we'll see how that unfolds in 90 minutes. We won't be live for that, but this is just setting you up for what to expect, hopefully. So as if we determine that we're going to go back up to this region, you'd have resistance at 22.5, and on the way up there you'd be rejected possibly from the 23K region as well at the 618 of this impulse. And you have these levels to watch at 22.2, 22.3. These are the possible rejection points for a continuation back down. So if we were to go back up, you would have possible resistance there, possible resistance there, possible resistance there. So you have a long way out, and from the immediate standpoint, you're already kind of tapped into some of this candle, but you can eat right through everything and bounce off that point there. So this is just your levels using Fibonacci. And if we look at the retrace of this, yeah, it doesn't apply right now. And let's turn on the oscillators and see what's going on. So the thing that I noticeably missed yesterday that I pointed out after the fact was the bearish divergence on the 6 hour here on the money flow. I don't know how I missed that, but we were getting overbought here and we were not making a higher. It was kind of a hidden bearish. As you see, the transparency of the crystal is not fully opacity like this one is. It's hidden bearish, and that shows that we struggled by entering with a higher high on money flow, yet we were not making a higher high on the price action. So this created a hidden bearish divergence on the money flow, and then we turned over on that. And I was looking at the Williams as a possibility for that push up from, like, similar to what happened in this region, rather than look at the disparity between the money flow and the RSI. We've gone over how that disparity likes to return to itself, so keeping an eye on how the money flow reacts to the RSI is key. Ironically though, we did put that out for the S&P, and we said that the S&P is likely going to pull back because we were seeing the overbought status of the 6 hour there, and it did do exactly that. So we should have applied the same semantics to Bitcoin. And the dollar surged up to a bullish trend-based fib extension level from back here. This impulse retrace idea gives you all these levels, and we're at the one level, which also coincides with these wicks and these range high ideas, and that's where we are at this current moment in time for the dollar. Sorry, let me turn off the higher time frame or time frame here. So, do we hold this range for the dollar and head up more? Next levels you have would be gapping to the 1382 at 106.884. Do we surge up in such a manner as we did yesterday is the question, or do we retrace at some point down to the 0.786? It all depends on the Fed meeting. They've already alluded to the hawkish stance of it going up more. So this is the level you would be looking for it to go up to. And yeah, that's the dollar right now. Let me go to the S&P. So if it holds, it would go bounce off this region. You got the 4 hour overbought coming down on you. You have the 6 hour overbought and coming down on you. You have these higher time frames which are rolling over at this moment. Which you got the bounce, you got the stoppage at the 618. Does it gap up at that point? We're going to remove this, start fresh. So this would be where you would see some sort of recovery occur. We got resistance at the cloud. You came back. To the weighted 200 weighted moving average, which also coincides with this level. And on the bearish trend-based fib, we are below the 1382 of that from here to here. We got that rejection at the 706. So at the bare minimum, if you did get a bounce, you could initially fake out, struggle here, and then come back down through this region to the 1618, or you can come up to the 1 level and recover some of this vector, or at least 50% of it. Let's see what the hourly time frame is looking like. You had the Williams. This was the thing that I said to take heed, which got me to put out that idea of it dropping, was the alarm on the Williams. So you were oversold on the stochastic RSI, but the Williams was not in a good position. So I was saying, if they hold this, which, you know, the alarm was telling you you're cooked, and sure enough, we came down. So this is now getting down to a green region. Will it meander around in the green region, in this zone, in this pocket, before curving a little bit and crossing to let the moving average of the Williams to come down with it? That would be an idea, where it would come down into this a little bit, not just immediately bounce off it, because you're not down all the way just yet. You could come down further. Similar to here, you're at a level like here, so you could have meandered around and then continue further down. You meander around and continue further down. Like, there's no reason it can't do something like this, and just keep going down to this level again and break through this, because the momentum is already emptying out on you on the hourly, and that coincides with the 4-hour starting to roll over as well. And you got the MACD just about to cross down on the 4-hour. If that starts to cross, that's no good as well. Six-hour coming down. So you got these higher time frames no longer in your favor for this 4 and the 6, the medium time frames. The 8-hour getting to that position at the 50 level itself, and kind of come up here and go down, like similar to this. And the 12-hour as well probably never took off. Yeah, you're getting to the 50 level. Never got the crossover yet. So if you were going to see a bounce, it would be at this level or in this pocket region off the 1618, even, you know, go down a little bit further and then come out of it in terms of confluent zones. And some of this 12-hour maybe takes a while to reset, so the 12-hour would stay kind of flat and then open up if it were to reverse. So the 6-hour and the 4-hour are not in your favor here, and so that could suppress the manner in which the hourly plays out, even though the hourly is oversold at this time. And so it's been oversold, but this Williams is still coming down. It still could come down a little bit more, so we could see it open with a gap down of sorts. Let's see. Did it already open? It opened. No, it didn't open yet. Let's go to the ES. ES1 mini futures. Shout out to everyone in the live. Thank you for coming on in and sharing your essence with me in this eternal eternal moment of which we all share an inextricable and inexorable part. I honestly rate you, Danny, is one of the best BTC analysts on YouTube right now. I don't know how to respond to that. I really appreciate kind words. I don't know if that's true, but I appreciate the praise for sure. So let's see, the getting kind of like a double bottom on the ES1. This is the hourly time frame, so you do have a gap over here on the left. You're getting this volume exiting. Yeah, so we've already entered off that 618. We're kind of entering into the 0.65, 0.66 region, the midway point of these two. And yeah, could we do the double? The hourly's overbought here, so it's already in the future. So the hourly's overbought. The Williams didn't really get that cross necessarily play out just yet. So you're getting a large amount of volume leaving here. This is the cumulative time frame volume delta. As you see here, it started to exit, and then boom, we broke down under it. We had interest show up a little bit down here and more interest showing up here, but then sell off, sell off, sell off, and now we're getting some interest to enter. These arrows automatically calculate based off the disparity to in whatever direction and become at length of whatever that disparity is, whether it's minimal or not. It's at break even here, basically, and then it starts to turn into a huge sell-off, indicating bearish, like hidden bearish. And so it started to go down some more, and then you start to get interest down at this level. So I'm not sure how to, this is kind of a newer idea. I haven't really figured out how to read it sometimes, but sometimes you can read it as hidden bearish and then hidden bullish and stuff like that. Like you can see where the bullish steps in and then it goes up, bearish, and then drops down. Let's get out of there, please. So, since everything's intertwined with the stock market, it stands us to look at the S&P right now to try to figure out where it's wanting to go. We had these from back here, these BPRs that they came and got and then faded down out of. Let's look at the DXY one more time. So it's starting to come back down out of this to give the idea of a retracement down into this 786 region of sorts, which would make sense in terms of like a SR flip in this region. You have a vector slash fair value gap here. So if we go to a lower time frame on the 15-minute, for example, you're going to see that that coincides with we can remove this though, bearish one for now, doesn't matter. And yeah, the 786 region of the bullish trend-based fib. So you'd look for some sort of bounce at that region or here. And in the meantime, Bitcoin flirting with the idea of going lower. Now there's been so many times where, let me just preface this, like where they attempt. And yesterday I was watching the analysis from yesterday, okay? And I was, for some reason, dead set on that idea of going up before going down, not just going down, even though they had caked the levels to the downside more than before. So it was kind of alluding to, they were enticing people to go to get in on a long, and I was saying it was worrying that they never tapped below that 706 region. So this is similar to, I keep pointing back to this, it was similar to here, how they went lower and they knock everyone out. And they get everyone kind of bearish when they break below this liquidity range, and then they start to shift the narrative out. So are they doing the same thing as before? We were talking about how here they had bullish divergence on the money flow and the RSI at this point. As we drop down, we had the money flow coming up, the RSI going up. As we were making lower lows, that expresses interests of larger players. This is bullish divergence, and then we started to come out. Are we seeing the same thing occur here? Not really. If anything, you're kind of at class C level, because you are making lower lows on price action, check. But on the money flow RSI, you're kind of at an even value. You're not making lower RSI and money flow values, which is interesting, so it's kind of exaggerated. You're kind of making this same point. So this is class C bullish divergence that's still kind of intact of sorts from that point. This is why I do the dots here, so you can kind of just see if they're at the same value or not. So that's kind of interesting on the 4 hour. The 6 hour did keep that bullish, it wasn't the 6 hour. The 6 hour had the bearish divergence, and so that's what's playing out here on the money flow, the bearish divergence on the money flow. So some people preemptively entered on that bullish divergence that we had on the 8 hour that clocked in. Let's just do this. So we had the bullish divergence on the money flow on the 8 hour and the 12 hour, as we pointed out. These take time to play out too, so if it was going to, I'm going to get knocked out of this profit here, but like you had this one here, and then we still went lower. So a lot of times they spawn a bullish divergence which triggers a liquidity grab. So in this case, you have bullish divergence and it triggers a liquidity grab to the upside, and then they reverse it. And then if you have bullish divergence, then it triggers a liquidity grab to the downside, and then they reverse it. And this becomes your shoulder, head, and shoulder out. And so it gets everyone in their most bearish and then reverses it and then creates the other shoulder out. And this is pretty much how you have either the W's or a complicated form of a extended W, where the right side goes down lower than the other side. So it looks like we're doing an extended W. If we were going to go up from this point, it would be at a lower region. And we still, we had those crossovers. The 12-hour crossover got negated before the candle close locked it in. So we don't have the baseline crossover as far as I can tell. Did I turn them off? Let me see. Yes, I did. So we'll turn the crosses back on. So we did have that crossover that didn't play out just yet. We did have it here, and then it played out. So we're doing a form, a different form, obviously, than this, where we're going lower and creating a extended W if we go up. Now, this is where you would take a look at the 22. Let's see what that's looking like. The treasured 22. So you had bullish divergence on the money flow as well from the 22-hour time frame. So that's still locked in too. So it's interesting. You're getting these higher time frame positional entries here from money flow perspective. A lot of just money flow only bullish divergence. So generally the key was having the both on the RSI and the money flow at the same time, but you're getting them on all these time frames that you didn't get back here. So we had it on the 4 hour simply back in this region. We had both bullish divergence on the money flow and the RSI, and that's why I was dead set in the FOMC meeting. Even though they were having these candle games they played, I was like, nope, it's going to the upside, and it sure did, because the bullish divergence was indicating a direction regardless of their games. But it's not as clear this time around. It's kind of ambiguous, and it is the pivotal moment of the trend continuing or ending here at this point. It's either we're going down and continuing further down, and getting everyone bearish, or they could go even further down and do some sort of games. They're playing they're trying to make this as difficult as possible. This one was, for me, it was easier back here. To read this I was more certain of this one than I am of this. So, but in terms of liquidity, like when you clear out some of these regions, let's just go to the heat map to keep the narratives intact. Liquidity time, boys and girls. So we'll skip the 12 hour because it's only 12 hours of data, 7 day. Seven-day. So slightly more caked to the upside in terms of value here. You have, these hotter yellow regions up above. Do they bounce off the bottom here at 21.5? That's a little bit far away. 21.5. Not really. It's right there, but they could bounce off that before coming up to that region on this time frame, although it is imbalanced to shorts, as in it would aim at them more than it would the longs. In this region, you're starting to see it get thicker and hotter at 21.5. You got 17 billion at 21.5, just a hop, skip, and a jump away. On this time frame, it's looking juicier for the downside to continue to 21.5 at the very least. It's getting hotter too because it was at previously 13 billion as of March 3rd, now up to 17 billion. So they've enticed 5 billion more down at this 21.5 region. So if they were to go down, that would be a juicy place to look for some sort of release of long liquidity and a bounce. And yeah, that's looking juicy right now because it's right nearby. And if you look just above, there's 5 billion, 6 billion here, 6 billion, 2 billion, 7 billion. It's just kind of sparse by comparison. So you tell me, like if you were hungry for money, which direction would you immediately go on this time frame? I'd go to this region without hesitation or question. And then you go to the 3 month, and it looks even juicier. So you get to the 21.5. See how it starts to like consolidate these blocks into larger groups of price action. So you have to look at the entire thing. So that's $30 billion that it would release, plus the bit here. This would be like 50 billion on this time frame, as opposed to just 10 billion here, 10 billion there. So it looks like we're coming down to this, and then based off that release of that, they can buy Bitcoin to surge it up to, they use that to create a catapult up if they release enough of it. And so the large amount would be honestly at 20,800. So let's go look at what's at 20,800. Cat, you're being impossible today. You're being impossible. You're being nasty when I pick you up, and then when I put you down, you're being noisy. So 20,800 would be into this pool between the 1 and the 1382. So 1,848 billion. Yeah, and you got that whole thing caked down there. So on the 3 month, looks like it's aiming at that region as well. 6 month. Yo! Abominable! How's it going? Thank you for coming on in. I'm chilling. Had a nice day at work. I got a new Lego piece. I got a cyborg girl for my daughter. She's half cyborg, half like space fighter or something. Anyway, so the 21. Yeah, so as we went over, just to give you a clue on the key again, you have 100 billion now equaling yellow, so it's not going to show as much yellow over here, but this, I assure you, is a lot of money. 33 billion, 32 billion, 59 billion dollars, 65 billion dollars, all in this region, as opposed to 14, 1, 7, less than 1, less than 1, 3, 3, 31. So you got 72 billion up at 25.5 on this time frame, but pretty much all the way up to that region, there's not really that much on the 6 month, which they would have to gap past it to get. The thing that, you know, was always interesting to me was how much they were caking up down here, although they did leave some down here before they left this alive. They left the 15.2 region untouched at $109 billion still there to take, and then they just meandered around and tried to take it and couldn't, or for whatever reason, and then they came up. So maybe this is just the region they can't take, even though it's totally caked up here. I'm trying to play with the idea of letting go of them coming back to this region, even though that doesn't seem like that would occur. But, you know, you have 12 billion here, 54 billion here. So at 24.4, you have a large amount that would release. 18, 36, 178. So you, like, in this upside thing, it's kind of not much here unless they go take out some of this. So if they come and take some of this out, then they get the money back to propel themselves beyond that gap, to take something juicier at the 24.4 region. But up until 24.4, there's not really much of value here in this range we dropped out of. So this drop down kind of gives the intention that we will go lower, and that's why I was looking at that idea. I just thought we would come back and get some of the vector candle first. You know, I thought we would come back into this a little bit slightly and get like that 11 billion here or something, and then head back down. But there is a possibility we just break down completely and just take all this too. So this is where your liquidity stands, and I'm sticking to it. Let's go to this here for a bounce on what time frame. So we have the 15-minute has reset in a strange manner. Let's check it out. If you're curious about the indicators you're seeing, the link is in the description. You can look at the components of what each of these things stands for and what they do in terms of reading the price action. We're going to take a look at some lower time frames, possibilities of a scalp entry on this level to see if it will bounce. So we got the 5-minute. So basically the 1 hour is kind of, you had bullish divergence on the money on the RSI on the hourly too. So when it got into here, you had bullish divergence that played out, and we're back to square one on that, having gone nowhere. You're at the bottom of the channel and you got the cloud thick, no signs of reversal on the cloud. For the hourly, you'd likely come up and get rejected on the cloud. If you had an hourly play or 15-minute scalp, it would, you know, likely reject off the cloud at some point. If it turns around, but cloud is being unpredictable at this moment. Definitely you want to wait till you hear what the FOMC is cooking before you stick your bun in the oven, so to speak. The 4 hour just chilling out at this region. Alright, so let's take a look and see what you guys are into. Do you guys got any interesting things to look at? Any comments? Anything going on? Let's see. We're at the bottom of the Keltner channel here on the 4 hour, but they create these descending channels and ride it all the way along if it intends to go lower or higher, like, you know, it goes lower and then it goes back up out of it. So it doesn't mean it necessarily bounces at that exact region, although there are times when you go outside of it. It's kind of like a TDI where it goes outside the band and the volatility snaps you back in. So if you go outside like you did here, you're likely to snap at least back up a little bit. What's up, cat? You gonna be not nasty this time around? What's up? You wanna say hi to everyone? Here. What's wrong? So you got the, you don't have the baselines in your favor here either. You see them sitting above price on the 4 hour here. So the baselines above the price like this is not really a good thing. So until the candle can come up above this and they're beneath it in this manner. So the price scooping in this fashion is the easier entry of sorts, where it's you get the crossover and everything just kind of smoothly goes up in your favor at that point. Here, it's not really like a clear signal, so I can't really give you like a clear area for entry. Whereas here, we kind of held that baseline in a nice manner and just rode it up, despite them playing shenanigans here at the FOMC at that time. So we're gonna go to the hourly here. So these are the bearish trend-based fib levels. If we can get above that point, then the narrative structure would change, but otherwise, you know, you can come up to here, flirt around there, and then create an inverse head and shoulder out of here if that were going to be something that occurs. But as the liquidity suggested, you have some more to go down to, possibly first, to get their refuel. What's up? What's up, kitty cat? You're biting me again. So I want to see how the Sol what's the Sol rocket doing? It's went down to 8, dropped. Everything's kind of bleeding out at this time. Everyone's kind of like chilling on the sidelines, as you should in these type of situations, because these are kind of manipulated. If you didn't notice that candle from here, it goes down and immediately came up, just kind of pinged the region. So as we said before, this kind of 21.5, 21.4 looks to be the area to knock out all of this liquidity on multiple time frames, and it would provide you with a idea for, sorry, did I say, yeah, 21.4. So it would be that immediate area, but you could continue further down. This was on the monthly time frame, I believe. But the entire region is caked to a downside narrative. If you break that 21.4 area, then you would be kind of switching from higher low to lower low. So if you break this region, 21.5 looks to have a lot. So the 21.4, between 21.4 and 21.5, which also coincides with this fib level, if you bounce off of that, you could see the continuation to a grander, the continuation of the trend. But if you break this and start to fall into that region and close candles in that region, we've now broken the structure to a bearish modality, and all of these other regions start to come into play. Larger pools of liquidity still on the table. But until that time, you could still look for little bounces here and there. You definitely don't want to think of the idea of shorting just yet. You'd be thinking of buying at a discount, selling at a premium, and we're getting to that discount range. Like, let's go back, let's take off the indicators and go over the idea of discount and premium and these external and internal range liquidity zones and where you would draw these fibs. So we'll go to a clean chart. Is that clean? I don't know, but let's go to a different one. Actually, so I'm going to clear this, remove it. So essentially in this region from January 15th, not even, I would say from once we broke from January 18th above that region. So we've been from January 20th, like you could say this entire zone. You know, you can look at this entire region as a range, right? And we've just been trading between this range, and this is the low and this is the high. And so discount is anything below 0.5, okay? So 0.5 is equilibrium. That's where everything's equal. So we traded a bunch equally here. If we do the visual range volume profile, most likely that's going to be a point of control, watch, or thereabouts. So it's just above the 0.5, which is equilibrium. So most people traded it fairly around that region. And so we're below the 0.5, so we're below the equilibrium. We're at a discount. So everything below this region should be considered a discount if you are looking at a bullish narrative structure. So anything below this range would give you the impression of buying to go up, not selling to go lower. So you'd be looking for shorts up here and in this region when with the 236 idea of it going lower. And so we're not thinking about shorting necessarily, we're thinking about holding this range to go up or getting that liquidity grab to go up, and that could be at this 21.4 region. And so that would be nearing the 786 on this chart, and that would be discount. So just the main theory is you buy things at a discount and you sell them at a premium. Buy at a discount, sell at a premium. And then, so, you know, a lot of YouTubers put out the idea of like things breaking out, right? And then they wait for it to go to a certain spot, and then they say like buy here or something. But that's, you know, if you're using Fibonacci properly and you could set a plan into motion where you would get it at a lower price, you would be actually trying to long down here instead, and then you could take profit and add to your position in there instead. So the idea of discount and premium just gets your mindset to look at the red candles and the positions down here as juicy long positions, as opposed to buying the sentiment everyone is bearish for more downside, because this is the danger where you get trapped into to become that that short liquidity that pushes it up. Similar to what they did yesterday, they played this game and then they trapped all those people out, especially the 100x people. So yeah, to me, we're at that region similar to back here where you would be looking for that double bottom possibility out after you grab whatever that is they're coming down to get. Once again, if it goes below 21.4 and holds and starts closing higher time frame candles like 4 hours and stuff like that, then the show's over for upside for the most part. As long as we're in this region, we can still look for a positional bounce area for that 170 billion or whatever region. All right, ladies and gentlemen, let me see if you got anything to share, and then I will say goodbye. Yo, Rocky, what's up? So that is it. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. So these are the regions, folks. Check them out. Enjoy the show. I don't like watching that guy talk, but I like to hear what people are saying about it. So I will catch you on the flip side. Peace.